and it is Boss Energy. It's cut its cost guidance after a strong December quarter at its honeymoon uranium operation. The uranium miner has also reaffirmed its FY26 production guidance of 1.6 million pounds, anticipating further growth with the Brooks Dam North and Gould Dam projects. Now, Ord saying that the quarterly result was broadly in line with expectations, also noting that the legacy contracts could drag down realised prices over the medium term. We can see that the stock is up more than 6% in today's trade, along with the other uranium miners. Mathan, let's start with you then. What are your thoughts on Boss?
On all segments of the energy sector, and uranium is part of that. The big thematic is, as everyone knows, data centers, AI needs massive baseload energy. Nuclear probably is the only clean, technically clean, green energy that they can invest in, and that's what they've been setting up. So the demand was always coming. If you're going to assume that there's so much capex going into AI, well, you need energy for all of that. So uranium cycle is flying. The two biggest producers, uranium prices are running. Two biggest players are Boss and Paladin. For me, the problem I have is the main asset has a lot of questions. It's underperformed. I think it's got about 16% short. Has it bounced today? Yes, everything in uranium will bounce today. And Boss and Paladin have substantial shorts. I think Boss has about 16%, Paladin has about 12%. So there'll be some short covering, so you'll see a bounce. We prefer Paladin. Look, this sector has high operational risk. It's not for the faint-hearted, but the reality is the cycle is there. Commodity price is running. It's driven by demand outlook rather than supply worries. And the biggest producer for me, which lesser risk, is Paladin. So we're playing it through Paladin.
Okay, and Boss, would you hold it or not?
No, I'll take profit, move across to Paladin.
Okay, that's a sell then for you, Jonathan. Look, I mean, they are highly shorted, those uranium stocks. How are you playing it?
So yeah, we actually bought Boss, and then they had that operational miss last year, and that's where the stock price pretty much halved in value. It actually got down to just over $1 at its lows, and it's back at 193. The good thing though is I think for anyone that's holding it, the lows are in. Like it did get down to I think $1.20. I won't say I forget the exact low, but it's bounced substantially still then. And the good thing is like the reports today show that basically they've got their operation sort of back on track. What caused the actual first drop was the ASIC blowout. Like it was, they were guiding, I forget the exact numbers, but obviously it missed and the market just said, oh, hang on, what's going on there? They've now had 2 quarters where they've got their sort of cost in line and their production guidance where the market is actually sort of taking it positively. So I think the lows are in for Boss. I do agree with Mathan that Paladin is the safer play. It is the leader in the space. But if you're holding Boss, I think you should add some here because the lows are in. And if you're long from 4, very low chance that the uranium price itself will cause it back to get up to 4. So you need to back that original conviction and the thematic of uranium and actually buy some here. So it's a buy for me at these levels. And as I said, management has shown that they've got the costs under control over 2 quarters. So I think that continues. So I think it rises from here.
All right. So difference of opinion we're seeing there with Boss. So a buy for you, not a strong one though.
No, not a strong buy.
Add to it.
Yeah. It's if you've got it and you've held it for all this time, you need to add in to bring that average down and let that thematic play out.
That is the view on our stock of the day, Boss Energy.